The Edgeless Horseman here is May 17th, 2023. I hope to make this actually a quick video. The topic of today is simply, it's just way too easy. When you understand how markets work, how they move, how wrong they can be, what happens after they are very wrong, and how sentiment works. And sentiment, since that's human psychology, it's the same, just in varying degrees. But still, it's relevant for all marketplaces on Earth where there's humans involved. I love the junior sector because it's so dumb. Because it's so sentiment driven. If we didn't have a sentiment driven market, it would be a lot harder, because then the sector would actually be efficient. If everyone was rational, you would not be able to find something that was too cheap, and you wouldn't have the kind of returns you can get in this sector, because juniors would never become too expensive. Thankfully, this is one of the most sentiment-driven sectors that go way too high and way too low every other year or so. And that creates huge opportunities for people who understand that if the sentiment is too bad, prices are too low, they're going to go up a lot. If they're too high and sentiment is too high, prices are too high, sentiment is too high, they're gonna go down a lot, because that's the only big change that can happen. Again, you can't be, if you're 100% bullish, there's just one way that sentiment can change, and that's getting less bullish. If you're 100% bearish, there's only one way that can change, and that's to become less bearish. It's going to be like that forever when humans are involved. You can look at any chart, any security, any commodity, things like that happen all the time. Then of course you have the actual fundamentals as well, but sentiment is such a huge dictator of the short to medium term that it's literally ridiculous. I mean, again, you can see companies where absolutely nothing has changed. Value is exactly the same or close to it, because from a long-term value perspective, things doesn't change too much, even if metal prices swing in the short term. But still, you can see prices go up hundreds of percent and down 80%. And because I always see, people really like to believe that the market is always right. If prices are low and you're sitting there, it's like, hey, this is too cheap. This looks really cheap to me, or expensive. And then they keep going in whatever direction. That's, hey, you think this is expensive. Then it goes up 100% more. Or you think this is cheap, and then it goes down 40% more. You can be totally right, but that's it. But the market can, and market participants can get much more greedy and stay irrational for longer than you expect. I mean, anytime I start buying something cheap, it always gets cheaper. Simply because the trend is down, and that makes it easier for people to want to sell tomorrow. The thing is obviously that they're not going to stay that way. It's not going to stay cheap forever if it is in fact cheap. And nothing is going to stay overvalued if it is in fact overvalued. I mean, people say, yeah, the market is always right, don't fight the trend, or let the trend be your friend, etc. I mean, Tesla reached 1 trillion in market cap. Dogecoin, which has been officially stated by the creator that it was made as a joke, reached 70 billion. And oil went negative. And this happened just in the last, couple of years. If that's not proof how insanely irrational market participants and prices can get, I don't know what to say. I mean, it's not like it's some obscure shitco or you know, crappy junior, etc. Dogecoin stated as a joke. It's like, I mean, it's akin, given that, okay, if Dogecoin is worthless, it's like a junior miner going out there, hey, I created this company called Shit Creek Gold. I did it as a joke. I'm not gonna even do anything. I'm not looking for gold. I just did it as a joke. And let's say that went up to 70 billion in market cap. I mean, it pretty much is the same. That's just how absolutely bonkers people can be. And how wrong the market can be. Oil went negative. Okay, so obviously things can go up for longer than you think it should, and they can go down for longer and get cheaper than you think they should. But what happened? These were obviously, I mean, joke prices. Tesla, way overvalued. Dogecoin, infinitely overvalued. Oil, infinitely undervalued because it went negative. What happened? Sooner or later, Tesla went down 75% after this craziness had topped out. There were no more bulls left. There was not enough new bulls to bring it up any further, so the trend changed. And when the trend changes, 90% of people, you know, since they're trend followers, they get bearish. They were super bullish the day before the top. Obviously. As soon as the trend changes, everybody changes their tune. Because almost everyone is a momentum trader. And that's what we as value investors, that's what we're front running. We're front running when the glass can't get much more empty. And the only big change left, by definition, is for the glass to get more full. And perhaps very full. That's the big returns. When it goes from almost empty to almost full. That is the sentiment swings that comes from that, you know, hundreds of percent in juniors. So yeah, Tesla went down 75%. Oil went up infinitely. I mean, an infinite amount, since it was negative and went positive. Now it's at, I think $75. Dogecoin went down 93%. For a time, all of the bulls looked correct. Tesla reached all-time high, Dogecoin reached all-time high, and bears in oil looked infinitely correct because oil went negative. So every single long in Tesla looked super smart, every single long in Dogecoin looked super smart, and every bear in oil looked super smart. After those trends changed, the complete opposite happened. Every bear in Tesla looked right, every bear in Dogecoin looked right, and every bull in oil looked right. So Tesla peaked, went down 75%, Dogecoin down 93%, oil, again, it's like, I mean, basically infinite from here to here, and now it's 72. That's it. I mean, that's all you need to know. I mean, it's just ridiculous. This sector is so boring. Because it's so easy. Right now it's way too easy. Way too easy. It's like the opposite of Tesla at 1 trillion or Dogecoin at 70 billion. Or and like oil almost being negative. Things go, if they're too cheap, they never stay that way. If it's too expensive, they never stay that way. That has been the case since the dawn of time. Thousands of years, everything works like this. Japan had a huge property bubble, etc. An immense one. I think I read sometime that the Imperial Palace ground was valued higher than all the real estate in California or something. After that immense bubble bursted in, I don't remember exactly when it was. Was it 1980s? Sometime around there, I think, or the 90s. I mean, they're talking about lost decades for Japan. The mean reversion was so obscene because the prices had gone up so. It was so overvalued that they paid the price decades later. And in 2011, sentiment in miners was, as far as I understand, I mean, I owned some gold around that time, but I didn't own miners. And this is the mining short, obviously, because this is a Bear Creek short. If gold was on this short, it would be close to all-time highs. Miners are not. So we're still, I mean, after this cataclysmic price decline and juniors became extremely cheap, that got corrected. After they got extremely overvalued, that got corrected. Then it was excuse me, quite overvalued here, corrected. Too cheap, up, quite overvalued. Well, quite very cheap here, corrected. Too expensive, corrected. Now we're close to. Well, we are too cheap, but it's like, yeah, we're barely off the extreme cheapness. So one could say, I think we're kind of still paying for this. A lost decade, if you know what I mean. Because the high sentiment wasn't as high here as there, and sentiment was even lower here than here. So that's what I think is happening. I mean, the coming change is gonna be huge, I think, because I think sentiment, given enough time of given enough disappointment, etc. I'm just looking out there today, for example. It's like I've been posting quite a bit on Twitter, and it's like almost nobody's there, or maybe I'm being shadow banned or something, and I do tend to spam a bit sometimes, but it's like no one is there. And we've seen the TSXV volumes, they're the lowest since 2005, since here. You can see what happened after that. That's the thing, it's like, I know I'm gonna win. That's what makes this sector so boring. And on the questions like, okay, if you know that something that is too cheap is gonna go up, and something that is too expensive is gonna go down, all else equal, then you only need to figure out what is cheap. Because then that's gonna go up. Again, all else equal. Things can change, obviously. And you might not be 100%, you're probably not gonna be 100% in all cases. And even if you are, even if it's too cheap, there are no guarantees, but it's a guarantee that it's a buy still. But you want to, of course, be diversified, because anything can happen in a sense. But it's like, I mean, take Magna Mining. Magna has, I think, around $20 million right now in the bank. The MOU, which was signed, when was that? Like 2 years ago or something, when nickel prices were around these levels. Lower inflation, though, that's one thing to keep in mind. But still, that MOU with Mitsui, and I think the management team thought that was too cheap. I think that was signed around, well, it might not even be 2 years ago. I think it might have been around this time, actually. Let's say early 2022. Still, it's like no interest in the junior sector. Magna was a new kid on the block. Nobody really knew about it. Hard to raise money. So they did an MOU, signed an MOU with Mitsui, and that MOU implied a price of 64 to 100 million Canadian for the Shakespeare deposit alone, not including the Greater Shakespeare project. So only for the Shakespeare deposit alone, how it looked at that time, up to 100 million for Shakespeare alone. Magna nowadays, after having acquired Green Hill and showing that, hey, there's much more at Green Hill that we can flush out, and they're going to do exploration at Shakespeare, etc. I mean, they have possibly made a new also near surface discovery, and obviously we had the resource estimate. I mean, Magna is a beefy, Green Hill has a beefy resource. So I would say that it's obvious that Green Hill is the flagship project now. I mean, some of the drill results are obscene, and the mineralization starts near surface, and they might be a year away from actual, cash flow. So it's highly relevant what they have, because monetization, the threat of monetizing it via production is, I mean, very real and possibly imminent. Given that within, let's say, a year, that's still quite short term. Otherwise, if there was no chance of this value being monetized in the next 10 years, obviously it's going to be hard to force the market to pay a fair price. And who knows? I mean, if it would never be a mine, obviously the price would be zero. That is obviously not the case. I mean, Magna is the most advanced nickel copper PGM junior in all of North America, with past producing assets, which makes them semi-permitted already. Just the sunk costs alone for Shakespeare, I mean, it's permitted for a 4.5 thousand tons per day operation. It has a PFS or even a FS, I don't remember. And Green Hill with hundreds thousands of drill meters, etc. Just the sunk cost to redo that would take years and cost tens of millions of dollars. They have all that. So it's just funny that Mitsui thought that Shakespeare deposit alone at around the same nickel price, just a year or so ago, was worth around 64 to 100 million Canadian. And I think Magna Mining thought that was too cheap. They didn't want to give away 10% of the project for that amount. And obviously we now know that, hey, they had bigger plans and picked up Green Hill. So it's like, if you have 1 unit of Shakespeare, the Shakespeare deposit, and that's worth 64 to 100 million, and then you add Green Hill, which is possibly worth like 2 Shakespeares or something, plus the greater Shakespeare project, but let's just say that it's worth 2 Shakespeares. So you have 1 plus 3. And they have probably synergies between them. They're nearby, and possibly you could, if they decide to build a mill and maybe have a grant or whatever from the government for 100 million, and then they could truck Green Hill ore to the permitted Shakespeare site. Obviously it's not just 1 plus 1, it's actually 1 plus 1 equal to 3, whatever. But let's just say 1 Shakespeare is 1 unit of value, and then you have Green Hill and Greater Shakespeare project, and let's say that's 2 units of value. So you're 1 plus 2, that's 3, right? I mean, if you believe, or according to Mr. Market right now, it's like 1 plus 2 equals, 0.8 or let's say 0.9. Depending on what you think the actual value of the Shakespeare deposit is. But the enterprise value is lower than the upper range of what Mitsui put on Shakespeare deposit alone. That is just absolutely crazy. But trends are this is what every momentum trader looks at. I mean, to me, this is absolutely crazy. There is no doubt in my mind that Magna Mining is too undervalued. And when something is too undervalued, all else equal, one day it will go up. Like Tesla was too overvalued, and one day it started to go down a lot. And Dogecoin started to go down a lot. And crude started to go up a lot. And now we're here in the overall junior space. Too cheap, it's gonna go up. It's not gonna be this cheap forever. That never happens. Never happens. It's inevitable. So the question is, how hard is this sector really? it doesn't take a genius to know you should probably not pay 70 billion for Dogecoin or 1 trillion for Tesla, or that negative oil price is a fair price for oil, because we need oil. We don't need Dogecoin. Tesla we might need, but I mean it's a business at least. It's like super common sense. Those mistakes got heavily corrected. Dogecoin got annihilated, Tesla went down a lot, and oil went down an infinite amount. This is just way too cheap. This is too cheap. If nickel in Canada, sulfide class 1 nickel is ever going to be worth something in Canada, which it already is, this is too cheap. I mean, there are other examples. Let's see here. Another one, and I talked about this on K Report. Headwater Gold has 11 projects and 4 earnings with Newcrest. They have around 4 million in cash. They have 2, depending on if you want to call the mahogany a discovery already. But the best results are from Katie so far. But Spring Peak sure has great results already. But the single best drill hole yet is from Katie. So 2 to 3 discoveries, 11 projects in total. Agate Point, that was probably relinquished because they didn't hit anything of interest, at least yet on the early passing. But let's just say that has some potential. It's not worth 0. So 11 projects, 4 earnings with Newcrest, where Newcrest will be funding at least 2 million or more, I think it is. They've already done that at Spring Peak, obviously. Well, maybe not 2 million, but anyway, it's like they're 4 million and guaranteed spending. So one could say that they probably have at face value a cash position that is probably around 10 million, I would say. That they have either for spending or cash that they'll do 10 million of work. In that case, enterprise value would be 13.6. But let's forget about the forced payments from Newcrest and just look at the cash position currently within Headwater. That's 19.6 Canadian in enterprise value divided by 11 projects. That's 1.8 million Canadian per project, which includes 2 to 3 discoveries. So the question is, would Newcrest care 2 shits about any of these projects if that was a fair estimation of the potential of these projects? Absolutely no way. Because that would be pricing in a 10% chance of a project being worth 18 million. Or a 1% chance that it's worth 100 million. And we know Newcrest probably wouldn't care about any project that doesn't have the potential to be at least, let's say, 400 million. Maybe more. 500 million. Up to 1 billion. I don't know. It is absolutely ridiculous how cheap Headwater Gold is. Yes, it's high risk. There's no guarantees, but on a risk-adjusted basis, it's beyond obvious that this is absolutely ridiculous. How cheap you can buy these assets for in the open market. Anybody could do it, and yet it's there. So if there is no way in hell that some of these high quality juniors are not cheap, the question is, how can you say this sector is hard? These opportunities should not even be available to anyone. The market should have corrected them. The same reason that Doge should never have gone up to 70 billion. But it did. Then it got corrected. Oil went up infinitely after going negative. It got corrected. Tesla was down 75%. Obviously, I would say the Doge and crude are more ridiculous than Tesla being at 1 billion, because Doge is a joke and we need oil. Tesla is still a business, and that's, didn't get corrected as much. Oil being negative is obviously most ridiculous of all, and of course when the mean reversion happened, when the market got sane again. I mean, there are other reasons why it went negative. Obviously, it's not that everybody thought that oil was worth zero or less, but still, that was a mistake, or market didn't foresee this happening, so that just happened. But the mean reversions were obviously bigger the more irrationally priced these assets were. Oil corrected most, Dogecoin corrected by 93%, Tesla for a while corrected by 75%. All major mean reversions. So anybody who took the bet that the mean reversions would happen, which they always do, obviously made up money. And this sector is this is too cheap. It's already starting to be cheap when it crosses this line. Very cheap, I would say. Now it's ridiculous. But again, why? Because this stuff shouldn't exist. You should not be able to buy Magna at this price. You shouldn't be able to buy Headwater at that price. That is going to be rectified by Mr. Market, assuming we are right. I mean, again, stuff can happen for better or for worse. Magna, since it has been creating value, they might create a lot more value. We know that, like Jason Jessup says, he's not going to sell a share before they hit 1 billion in market cap. Now it's at 117 or something. So he does not only think that Magna is undervalued by a lot, he also thinks they're going to create a lot more value. So if you can get these kinds of possible rewards from your buys, you can be pretty goddamn stupid. Or it's like, if I had 100 different versions of Headwater Gold, I would invest 1% in each, because this might be one of the cheapest high risk, high reward stories I know of. Main point is that you have no right, nobody has a right to call the junior sector hard when you can have opportunities like this. This is why it is easy. Because it can get so grossly mispriced. Either way too high, way too expensive, or way too cheap. We're in the way too cheap period now. We're not talking about a 5 or 15% price to value gap. We might be talking, 100 or hundreds of percent value gaps. It is absolutely insane how good the opportunities are, even in the higher quality juniors right now. You do not need to buy dog shit, because I see a bunch of people, they're whining. But if you look at their portfolios, it's like sometimes it feels like almost everything is a questionable high risk, high reward play. I mean, I think for like Headwater, I mean, my average, my typical, excuse me, high risk, high reward play might be a 0.5% position or whatever. And that's, when people, let's say, give me flack, like, yeah, but this junior went down this much, or I've seen a junior go down that much, or whatever. I have a ton of losers. I've had a ton of losers. Thing is that most of them, not all, I mean, some big losers have been, Novo from the top, White Rock, Montoro. I mean, Nova was highest, I think, percentage-wise. White Rock was a big loss, and Montoro has been a big loss as well. But on the other hand, it's like Snowline, major win. Eloro, big win. What other? Magna, still a big win, but it's just again way too cheap. So I think that it's been a big win so far, but I think it's cheaper than ever. It's probably cheaper here than, well, I can't say that it was cheaper than here. It depends on how much value they created actually, but still it's like back here, and they've obviously hit much more stuff. So I would say it's much cheaper here than here. So, I mean, maybe Magna is the cheapest ever. Or maybe it was a bit cheaper here. Still, it's like this was absolutely ridiculous to begin with. Point being is that if you can't find something that is cheap and is, let's say, bound to go up, then you have the right to complain about the sector being hard. The sector is hard when we're up here because it's very hard to find something that should not do like Tesla and Doge go down. It's very hard to find something where it's overvalued, and if it's overvalued, the market is going to correct that sooner or later to the downside. If it's too cheap, the only problem you have is not having enough. Because if it is too cheap, the market is going to correct that one day. So that's what's so mind-blowing. It's like when I see that you can actually, I mean, as a retail investor, you can buy these kinds of opportunities. You have no right to say that this is a hard sector. The only thing that's stopping people from making money in that case is that they don't even hold it long enough for the mean reversion to happen. It's like, you went short Dogecoin or sold and then it went higher. Yeah, it can always go higher. Tesla was probably overvalued long before it topped. But that didn't change the fact that the higher the rise, the bigger the fall. The bigger the crash, the higher the rally. The bigger the rally, the higher the crash. I mean, more and more overvalued because obviously it crashed higher from here than from here. Still, a huge amount. It just means that you're jumping off from a higher cliff. And in this case, it just means that the beach ball is pushed too far underwater, and it's going to be a massive mean reversion. And we're going to have a massive mean reversion in juniors someday. It's just going to start, and who knows, maybe it's going to be like, a couple of these other times where just, within a year, you made everything back and more, from whatever you might have, lost on paper on the way down. So again, my main point is that you have no right to say that a market is hard when it's extremely hard to be making mistakes and when the opportunities are extreme, the buying opportunities. Then that is an easy sector. Because it's going to be so hard not to make money when the mean reversion happens. And the only way you can F that up is if you're not even in it until the mean reversion happens. So I am getting bored out of my mind because it's like, and it's just crazy to me that most people can't see that. It's like literally nobody has any idea how, let's say, value investing works or how a cyclical sector works. They think this is a great curse. Oh, Magna is down. It's like, is that a good or a bad thing? Let's say Magna should be 200% higher, meaning it will go 200% higher one day. Is that a blessing or a curse? People always look at this. They never look at, investing in hindsight is worth nothing. This is what has happened. It's meaningless. This is what has happened. Then this is what happened afterwards. This is what has happened. This is what's going to happen afterwards. It's so ridiculously easy. And when you can find cases like, Headwater or whatever, it's like, excuse me, when it's a binary thing. Either Newcrest are absolutely brain dead, or Headwater is extremely cheap. It really is only those two options. Because the market is currently giving anyone the opportunity to buy 11 projects for 1.8 million per project. Or even if you just consider like let's say 5 main projects, 4 earnings and Katie, that's still, I don't know, it's like, yeah, $3 to $4 million per project. Would Newcrest give 2 shits about those kind of projects? Pricing in 1% chance that that's going to be a mine worth 400 million. Because 400 million is not even that much money. That's what Fosterville pulled off in free cash flow every year. And that was obviously a very high grade mine, but that's what Headwater is hunting as well. Not the exact type of system, but high grade low sulfidation system. The Midas mines, the sleeper mines, those were worth hundreds of millions, if not billions of dollars. And Comstock Lode, etc. That's what Newcrest is after. And Headwater per project is pricing in a 1% chance that they will have one mine or that a project will be worth 400 million. Explain to me how that is not extremely undervalued. This is I have no idea how people can lose money in this sector over time. And again, I'm saying over time. I fully understand that people are down a lot over this period of time. It's very hard not to have a paper loss. But over time, if you just understand that what is too cheap is going to revalue and what is too expensive is going to revalue. If you just have a grasp of that, you know exactly what to do at a time like this. And if the opportunities are extreme, if some of the juniors are extremely undervalued, odds are they're going to revalue by an extreme amount to the other side. If it's too cheap, it's going to revalue up to the upside. If it's too expensive, revalue to the downside. This is not rocket science. And I'm also saying that it's too easy just to kind of gaslight people. It's like, snap out of it, wake up. This sector is a lot easier than you think if you don't make it too complicated. This is literally a map of buy low, sell high, buy cheap, sell expensive. And it might take a year or two for it to be expensive. That does not mean it's not going to get there. And if getting there means 100, 2, 3, 4, 500%, a year or two is nothing. And if you have a company that actually increases its value, I mean, it's like what I was gonna say joked about. It's like, yeah, if Magna now, Mr. Market's calculation is 1 + 2 = 0.8. In a high sentiment environment, meaning overvalued, that okay, you have to pay more than the actual assets are worth. In that case, 1 + 2 might equal 5. We want to capture the delta between 0.8 to 5. That's why you have these hundreds of percent moves, hundreds of percent moves up, and big crashes, because that's 5 going to 0.8, and then 0.8 going to 5 again, forever and ever and ever. You should be bored by this market. You should be super bored, and you should say every day you see these ridiculous prices persist, you should say, thank you, can I have some more? And if they're still cheap the next day, you should say, thank you, can I have some more? If they get cheaper, thank you a lot, can I have some more? Every day until they're not too cheap again. That is it. And for the love of God, don't just buy any. I mean, yes, if you have, let's say, okay timing, that you're lucky. It's like, you know, we turn tomorrow and you're all into crap juniors, which just dilute, or just lifestyle companies, etc. I mean, pick the big or pick the good companies. Like I said before, you can make an absolutely idiot-proof portfolio right now. You could all the juniors, you could look at juniors which have third-party validation within the last year. They might have Alamos Gold as an investor, or B2 as an investor. Superior management, extreme high skin in the game. Landins are invested. Ross Beatty is invested. Rob McCune is invested. Pierre Lassonde is invested. Newmont is invested. Barrick is invested. Newcrest is invested. Anglo Gold is invested. Whatever. You can make it absolutely foolproof. Because you know those companies, either they are really stupid, or what they just invested in or is backing has a fair shot of finding a significant deposit. And then you look at the prices, and then you just think, hey, Newmont needs $1 billion or whatever to have a project worth their time, perhaps, and it's priced at, I'm just guessing here, it's like 30 million. You can obviously see the upside in case that turns out to be a Newmont type project. 30 divided by 1,000, that doesn't leave much. What's that? Is that 0.3% or whatever? 30 divided by 1,000. Oh, yeah, okay, so 3% chance. So you need to be right 3 times out of 100 for that to be a mathematically sound or neutral bet. But let's say you need to be right 5 times out of 100 or 10 times. Still, that's way too cheap. You would win so much. I mean, the reward is so extreme in case they find what they're looking for. It is just absolutely mind-numbing. And then you can just fast forward the tape 12 months later on. Okay, what might this company look like? What's the news releases coming? Because that's also what I see all the time. People have some company, some junior, typically a silver junior of some kind. They have no idea what the company is even going to do. They have no idea what the news releases are expected to be over the next 6 to 12 months. They have no idea why it should even go up. I mean, you should kind of be able to see the news releases that are coming and why it might matter. What we're front running, if everyone is depressed right now, we're front running when they're gonna be all greedy. If they're all greedy, we're gonna front run the fact that they're all gonna be depressed one day. And then you add on the company news, for example. It's like, okay, not only am I front running this, which is the big sentiment change, I'm also front running, like in Magna's case, there's gonna be a PA out. I think that's gonna I expect that to really highlight how cheap this company is. And who knows, maybe before the year is over, we're gonna, be even closer to bulk sampling and cash flow and some toll milling, and maybe there's going to be talk of a grant, maybe there's going to be a deal with a major, maybe they found a footwall discovery, which is like bonanza kind of stuff that might be worth, I don't know, hundreds of millions alone. There are plenty of upside surprises in Magna, and if it's already cheap right now, those are the dream case. Those are the dream cases where you're buying what they already have for way less than it's worth. And we have Mitsui's MOU to tell us that yes, Magna is way too cheap just based on what they have right now. And there's upside surprises to boot. So you might be buying something that you're like, I'm probably gonna, sooner or later, I'm probably going to be up a few 100% at least, because that's what you might think it's worth. And then there's potential for it to, double that or whatever, if they have, some upside surprises as well. It's just the best of both worlds. You get that margin of safety, you have the probable returns from there, and then you have maybe probable growth and high potential upside. It's like you checked all the boxes. So, I mean, how much, am I willing to invest in a case like Magna relative to some very high risk, high reward junior? I mean, probably 3,000% bigger position. My Magna position is large. It's probably 20 times as big as a typical, although good, high risk, high reward exploration story. And that's why I keep saying there are cheap companies, but others are orders of magnitude cheaper based on risk reward. And of course, there is this thing again that when I look at some, people own some juniors, it's like, why would you even own that junior when you can buy, some other companies that are obviously way higher quality? But to be fair, if they're, lucky and can hold out until the big sentiment turn, excuse me, some of these crap juniors might outperform the best juniors. But if you know that's what you're looking for, why on earth do you need to whine? Whining is basically saying, I have no idea what I'm doing. That's a big red flag for yourself. Anytime you whine, that comes from a sense of loss of control. Because if you're whining about this, you're whining about the opportunity getting better. And you get unsure because the market is disagreeing with you. Or the market is suggesting that Magna is worth less now than it was back here. You're afraid that the market is always right. But if the market is always right, why on earth did oil go negative, Doge go to 70 billion and Tesla to 1 trillion? Everybody says the market is your friend, the market is always the trend is your friend, the market is always right, etc. My mindset is the trend is not your friend and the market is always wrong. Because if I'm right, I'm going to make more money than anyone who says that the trend is always your friend and the market is always right. That's my belief, at least, especially in such a high volatility sector. Because in some cases, maybe it's like a very quite rational market. Maybe it's like, yeah, if I'm right and the market is wrong, maybe I just found 10% discount. In this sector, you could find 70% discounts. And maybe 200% overvaluation setup. It can happen, obviously, like in Tesla and Dogecoin. But those are quite unique cases. This is the largest bubble that perhaps we've ever seen in the world. And Tesla is, almost a unique stock. But this is what happens in the junior sector basically every 4 years at least. Or we have big bonds like 2008... basically 8-year bottoms. We have extremes, and then we have tops now and then. Anyway, thanks for listening. Again, I hope it's like I get very happy when I see someone out there that's like, they figured it out. They've understood that you can't take this market or sector too seriously. That it's like, there's nothing else to do than stay rational. Because this sector can be batshit crazy for a long time. And it's no reason to get upset. It just means that if it stays too cheap for too long, you're gonna make even more money if you add dry powder. And if it goes up longer and you think it's expensive, I mean, it means the fall is gonna be even bigger when it finally turns. So I love it when I see some, let's say Twitter followers, etc. They're like, pretty chill about it. And it's like, yeah, I don't really watch the metal prices too often. I mean, I think I missed 3 out of 4 market opens last 4 days or something. I'm finding myself, I'm starting to care less and less, because it's like we're so far away from any selling conditions that it's not even, again, it's like these juniors are not going to jump 100% in one day or 200%, and all of a sudden I'm going to be thinking, they're expensive. No, it's just we're months or years away from any, broad scale selling conditions in this sector, I would say. So the only thing to do is wait. And it's like, what I try to do is like, okay, how can I get more money to buy more shares, or do more due diligence and find out that, hey, if I really think about it, these juniors are actually much cheaper than these other juniors I own, so I probably should reshuffle a bit. That's work. That is productive work. Productive work is not sitting. I mean, there's a bunch of people on Twitter. It's like, if silver is down, they're saying silver doesn't look good. I mean, can it get more obvious than that? It's like, oh, now we have a firm grasp of the orbit. Absolutely nothing of value, but it affects everyone. And if silver is up, quote, silver looks good, and we're talking about upside points. And the same people are always complaining. If you find yourself complaining about this sector, that means you did not understand this chart here. Think about this chart and what it tells you. Just a few hints. It's obviously obvious that it doesn't say anything about the short term. Doesn't say anything perhaps about the medium term, but it says everything about the next big move. That's all. That's all this chart is telling you. So think about, how do I make money on that fact? When you understand this, you're not gonna be neurotic. You're not gonna be whining. You're not gonna, etc. That's when you know you get it. When you stop whining or complaining about the market. Because again, even if you own 20 juniors and there's no price change in any of them for 2 months, but some actually put out good news that increases the value, things have changed. You can take advantage of that. But value doesn't change from price changes. Value changes from fundamental changes. Same on the flip side of that is that, let's say you have 20 juniors and you think they were all equally cheap and nothing has changed for any of them, but prices for 5 are up 20% and prices for 5 are down 20%. Assuming they were fairly valued relative to each other, there's now a 40% price gap between them. So the ones that went lower or went down 20% in price, no value change, and the ones that went up 20% in price with no value change, all of a sudden you could sell some of the juniors that's up 20%, buy some of the ones that are down 20%. You're constantly in that case creating higher future returns, because you get more paid than your purchasing power increased with the ones going up 20%, and it increases well with the one that's the ones which went down 20%, because that's a 20% discount. So you get 20% more money from one and you get a 20% discount. So that's possibly a lot of future value created. You might have captured a good opportunity there just from prices fluctuating. Or again, if something goes up 40% in value, price doesn't change, you can sell something that has gone nowhere in terms of value or price, you still captured a 40% added opportunity. That is work. That is work. Whining, etc., is not work. Then you don't even understand what an opportunity is. Then you're thinking like everyone else. Anybody who whines about this sector, you already know that they have no idea what they're doing. If you whine, you're admitting that you don't know even what you should be doing down here. You don't know why you're gonna make money from these levels. You don't even understand that. So you're completely lost. So read up, brainwash yourself with common sense, research companies, etc., until you stop whining. Because it's when you actually get it, you start to understand how ridiculous it is to be whining about these prices out there. Makes absolutely no sense. That's like whining about having the opportunity to make a lot of money. Anyway, consider me biased. I own shares of Magna Mining and Headwater and any other. Assume I own of any other company I mentioned. Magna and Headwater are banner sponsors, so consider me twice biased. Do your own due diligence. This is not investing advice. Don't invest money you cannot afford to lose. And have a great day. Bye.